top story does come to us from CoinDesk. We're going to be talking about the FATF, the Financial Action Task Force, and its latest impact in the crypto markets with the travel rule. This is something we've been focusing on a lot around the office, and in its bid to become compliant with the latest travel rules, firms in the crypto space may need to adopt infrastructure similar to legacy financial systems like the SWIFT interbank messaging system. This is the unapologetically libertarian blockchain diehards are going to be scoffing at this idea of voluntarily complying with these new rules from the FATF, the new standards, but the companies and service providers that are inside the world of crypto, they have to recognize that the clock is going to be ticking on adopting these, to be frank, onerous standards set out by global regulators. Now, while embedding an identity layer over existing protocols, specifically designed to be pseudonymous, goes against everything that is holy in crypto, but the industry might not have a lot of choice if they want to abide by international banking law. And a lot of people are going to have to ask themselves, number go up or number go down. Now, how the FATF compliance would be implemented and what form it will take is something that the industry is going to have to agree on how best to comply. But it has to be done soon. It's a topic we've covered on the show before. Back in June 2019, the Financial Action Task Force, which is for those of you who don't know, that is the global anti-money laundering watchdog. It updated its guidance to explicitly include virtual asset service providers, or as they call them, VASPs. Now, this caused a big stir, specifically with Monero and their updated travel rules. They specified that all VASPs must share sender, which is the originator of a transaction, and receiver, or the beneficiary of a transaction, information for cryptocurrency transactions above a certain threshold. Now, the 1-year mark on the updated travel rules is fast approaching. And the FATF is going to be reviewing progress on compliance and enforcement at its upcoming June 2020 meeting. Meanwhile, FinCEN in the United States in May of 2019 issued its own version of new regulations pertaining to VASPs, stating that firms had 180 days to get their operations in order and meet compliance. This means that the travel rule also carries the added punch of United States law when it pertains to US-based VASPs. Now, FinCEN defines VASPs as any business engaged in the exchange, transfer, or safekeeping of virtual assets, as well as any activities related to issuing or underwriting said virtual assets. Pretty hard to get away from that. Now, opinion is split across the industry on how best to implement an appropriate technical solution. Some are favoring a blockchain-based approach, others preferring a more centralized database solution. But crypto exchanges, which are seemingly at the heart of the industry, will be even more challenged on an operational and legal liability level to roll out a compliant system in mass. And the issue so far with exchanges is related to two critical areas. One, there needs to be some means of identifying individual VASPs. This would be the rough equivalent to the bank identifier code, or the BIC used by SWIFT currently, or something like the international bank account number like the IBAN system. Now, the second issue is going to be concerning the matter of data transmission. The ideal solution for the crypto industry would be collaborating on a common standard for this communication, some form of interoperable message layer used by the network of VASPs to allow transmitting identity, authentication, and other message details to be pinned on top of blockchain transactions. I mean, this is kind of our thing. We better use the blockchain. Now, currently, the industry has proposed some 20 plus potential solutions that they're currently attempting to build or in beta to possibly address the problem. Now, some are relatively small-scale commercial endeavors. Others involve collectives of firms collaborating on open protocol standards. Now, while you may never have heard of these projects before, they do include Bitcoin Suisse's Open VASP system, CipherTrace's Trisa, the Signa Bridge, Netkey Shift, and KYC Chain. Dedicated crypto forensic firms that we've frequently mentioned on the show, such as Elliptic, CoinFirm, and Chainalysis, have all been working on this as well. Indeed, Chainalysis recently hired former FinCEN staffer Mike Mosier to help build the travel rule capabilities into their project. Now, while some proposals favor a traditional approach, using a centralized global registry of VASP addresses as the necessary trust anchor, others are suggesting a decentralized approach involving the use of a blockchain or distributed ledger. Now, quoting here, the assumption that blockchain must have the solution to something that is a blockchain problem might not necessarily be true, as desirable as that may be for folks at an aspirational level or philosophically. This is from Sion Jones. He's the senior partner at XReg Consulting. They're working on the InterVasp messaging standards, the JWG VMS system. Now, Malcolm Wright, who's the head of AML, anti-money laundering at Global Digital Finance, said his view and the view of regulators on a whole is that there needs to be more than just one tech provider to the solution. Quoting, so it might be that Coinbase chooses tech provider A, Binance chooses tech provider B, and so on. So we end up with a matrix, with smaller exchanges copying the larger ones that they want to work with. Switzerland has the OpenVasp project, and it's what you might expect from a country famous for its international banking prowess, with plenty of experience meeting existing FATF rules. The OpenVasp project is being headed up by Bitcoin Suisse and also includes the exchange known as Like, as well as crypto banks SIBA and Signum. Now, with Switzerland seemingly trying to position itself as a leader in the emerging crypto industry, they seem to have taken a practical approach, building a solution they describe the industry can start using right away. And a key design principle for OpenVasp is decentralization, with its developers claiming that this will help avoid the mistakes of the past, like having a single point of failure, centralized servers, and directories. In order to achieve decentralization where it's deemed desirable, OpenVasp is leveraging a solution of features from Ethereum. Exchanging personal data between VASPs in different parts of the world is going to require detailed legal framework in order to not run afoul of regulations like Europe's General Data Protection Regulation. That's the GDPR. This coming from CoinFirm's CEO, Powell Kuskowski. For this reason, CoinFirm specifically is working on their own system, and they have pulled in Gibraltar-based cryptocurrency lawyer Joey Garcia to help work out the legal details of what they need to build. They are currently focusing on a high throughput permissioned blockchain for writing the fingerprint of a compliant transaction built on the enterprise-grade DLT Hyperledger fabric. The latter employs a private channel architecture, which has been compared to private message channels on Slack. Now, there are two parts to consider when you are talking about the travel rule, according to Kuskowski. One is part technological, and the other is regulatory. Anyone who is touching this has to have someone from the legal space. Jeffries of CipherTrace said that solving the technical challenge is not any greater than the operational hurdle, or what he calls the sunrise problem, switching on the system for 500 VASPs at once. And as G20 countries gradually begin to roll this out, increased jurisdictional arbitrage also seems likely. According to Jeffries, people are going to lean toward the countries with either weak implementation or weak enforcement, Jeffrey said. It will be interesting to see how this scenario plays out. So you're welcome. Tuesday, and we get to come in and lay a bombshell on you. So I think that for a lot of traders, you guys aren't going to see any direct changes or effects in your life immediately. Most traders with serious capital are already utilizing KYC AML compliance, as are the majority of retail traders as well. It's actually fewer and fewer traders right now who are trading on unregistered, unlicensed exchanges with no compliance or regulatory framework. So I think that for a majority of individuals, a lot of traders watching this, your daily lives aren't going to be affected. But for those of you who are looking for jobs in this space, in the industry, this is something that you want to be educated about. This is something you want to be knowledgeable about. And this is something we want to be aware of, I would say, over the next 6 to 12 months as we see exchanges move forward with compliance, or they're going to face penalties. And again, that can put some burdens on the individual retail user integrating with the platform, or really realistically, actually little on the retail user. This is going to be more burdensome on the corporate clients and on the commercial clients, or what that really means in cryptocurrency is large money traders, particularly those who have agreements or partnerships with exchanges. But we've been talking about this for a long time, right? It's kind of funny that you know, the narrative that we had throughout all of 2019, 2018, was institutions are coming, right? The institutions are going to come pump our bags, guys. No problem, eh? And yeah, they are. They certainly are, but not for nothing. Not for nothing. So it's, listen, I don't want to be depressing or negative or anything like that, because this is far from the case. This is really good overall for price. This is fantastic for price. I don't know if you guys have noticed, but the traditional markets are in something like a 60-year bull market, right? So you guys want that from Bitcoin. Like, I don't think anybody watching this channel or involved in Bitcoin right now does not want Bitcoin to go into a nice, sustainable, long, profitable 100-year bull market, right? This is price discovery. This is volatility. This is the things that happen, right? That's what we all want. That's what we all want. That's what we want. That's why we're in Bitcoin. We want to be able to pass something that is safe and valuable and secure, regardless of how people use it, down to our children, right? And we want to put the damper on centralized banking systems, robbing the monetary value of our earnings, of our savings with inflation. Now, here's the nice thing about all this. It's very, very hard. Impossible. Not impossible. I mean, you know, obviously you can have collaboration between the Bitcoin Core Protocol developers, but the Bitcoin Core Protocol is already implemented and run by the network. So it's permissionless, trustless, decentralized system cannot be affected unless you're talking about a massive overthrow level, which I think we're past. I don't think it's possible right now. Bitcoin has too much support. You can have market manipulation. You can have all kinds of factors, but it becomes very, very difficult for the government to directly control what goes on with Bitcoin. You know, the CIA investigated shutting down Bitcoin back in 2012, and they at that time thought that they couldn't. And now it's 2020. I don't think that they can. I don't think that they can. I don't think that they can shut the network down. Which means that the network is not going to fundamentally change. So you are still able to utilize Bitcoin if you are a privacy advocate, if you are a security advocate. If you want to keep your holdings safe, private, and secure and pseudonymous, you can still do that. But if you're going to pay to play, if you want to trade for money, if you want to be involved with the exchange or transmission of USD value for commercial purposes or for any professional purposes or for any legitimate purposes, you're going to have to comply with this regulation, the way that I understand it. Or you're going to have to march in the streets. I'm down for that. I went to a bunch of rallies when I was in the 20s.